All right, we're joined here today by the Director of Financial Markets at OKEx, Lennix. Thanks very much for making the time to come on, Lennix. We really appreciate it.
Hello everyone. Is so I appreciate everything call enjoy here.
Okay, great. So, not everyone who's listening maybe is trading at OKEx, or necessarily knows you. So maybe you could give listeners an idea of what your role is at OKEx and what OKEx currently offers in terms of trading products.
Yeah, absolutely. So my name is Lennix. I'm the financial market director on OKEx. So I've been here for at least 3 years since the very first day of OKEx. My role is basically I was responsible for product development before, but right now we have a lot more focus on global, uh, international development, especially on institutional side. That is currently my role at the moment. I handle traders, quants, or all the market makers across OKEx. So right now, briefly speaking, OKEx is one of the biggest cryptocurrency exchange in the world right now. So we do offer majority markets is trading market. So basically, we offer spot trading and various kind of derivatives tradings. Our strength, I would say, is derivatives because we actually one of the very first exchange that's create the futures contract for Bitcoin, for crypto. We serve a majority of Bitcoin miners for them to hash the position and the expected income for on futures. So also that's the reason why in crypto we have weekly futures and bi-weekly futures and quarterly futures, unlike traditional finance that's predominantly monthly contract. So we have been developing and really focused on product development so far for 3 years. So right now we do have our derivative space covering not just on futures, but swap, perpetual swap contract, and also option. On the spot market, we do have a pretty good, strong spot market as well. Around one third of OKEx volume right now is contributed by spot market. Two-thirds are contributed by derivatives market. One third of the spot market also supporting margin trading on different kind of tokens from 3 times leverage to around 10 times leverage. So basically the lending market part, the trading market part. But we do have a lending market and saving product and OKEx pool and other saving that we provide various way for traders to earn a passive income. Aside from this trading market as exchange products, we do have our own created proprietary developed blockchain and OKB as a platform token. That's it.
Yeah, I think that's one of the advantages that OKEx has over other exchanges is that under the same roof you have spot margin, you have all the different derivatives, including futures, swaps, and options, and you also have this, like you mentioned, the passive income options where users can lend out their tokens and earn a yield on it. And out there in at least on Ethereum, there's a lot of talk about DeFi, so decentralized finance options, where people can basically over collateralize lending to one another. Um, and there's some of them which often will have security issues where they are being hacked or there's some bug found on the smart contract. So, how would you compare the OKEx lending products, which I guess we can call CFI, like centralized finance, versus the DeFi? What are the advantages and disadvantages?
So if you're talking about CFI lending product and DeFi lending product, so basically we share a similar notion. As a matter of fact, we share a similar notion that we would like to facilitate a protocol that allows a primarily peer-to-peer loan and saving market. Even on OKEx side, we do have our saving products or C2C loan product. So basically, the idea is you as a lender, you can collateralize your Bitcoin and ask the borrower to borrow more money, more different kind of tether to you. So it's basically still a peer-to-peer loan if you compare with all the other DeFi protocol. But also on OKEx side, we do have a saving products or staking products for user to earn a passive income. So these type of CeFi lending features is actually, I would say, OKEx more likely acting as a counterparty or the middleman or proxy type of service for our users. So okay, we're responsible to collect people or trader who have money within OKEx, and we lend it to our margin traders. And OKEx will handle the risk management part and components. So despite the fact that it still looks like a peer-to-peer loan, but OKEx played the role as the risk manager in between. So obviously, DeFi it looked like a perfect world to me. So everything is decentralized, open sourced, and it's transparent, but it's also contain inherent risk in terms of security issues, pricing issues, liquidity issues. CeFi, I would say, it's more like a pathway or one of the pathway for us for blockchain community to reach and before we reach 100% this DeFi protocol.
Yeah, I think that's probably the right way to look at it. And while DeFi is still in the very early stages, there's obviously going to be these kinds of bugs that pop up and potentially people losing a lot of money where there's no recourse. Whereas a firm like OKEx, which has multiple years as a solid record in terms of securing users' funds, there's a trade-off there where people will obviously it's non-custodial in DeFi, but someone can then have a little more peace of mind if a large firm like OKEx is behind the products and they have a good track record. So basically, there's three different ways, as I understand it, that OKEx is offering traders the ability to get yield on their crypto. One is through staking, like you mentioned. There are certain uh, proof of stake and delegated proof of stake chains where they'll allow you to actually stake the coins and get a return on them. So OKEx provides that service of staking the coins for you and then providing a return in that regard. And then you have the C2C lending where people just over collateralize in, say, Bitcoin and then borrow Tether against it. And then you have the lending for margin products in spot where people can actually borrow funds, take margin trading positions on the spot market. Is that right?
Yeah, correct. So staking just OKEx will act as a proxy saving product. Saving means that we will subsequently lend money for our user cash, for idle cash to margin traders. And these rates will be determined by the supply and demand of the day. So you can imagine that if the basis is high or there's a large basis between spot and index and futures, there will be potentially the rate should be higher because everyone is actually trading or margin trading on between spot and futures. C2C loan after collateralize your Bitcoin so that you can ask for tether.
Okay, so so as I understand it, the OKEx doesn't have a peer-to-peer lending order book the same way that Poloniex or Bitfinex, but you're still adjusting the rate based on supply and demand in the pool of lending that you're offering.
Yeah, correct. We don't have an order book like what mentioned like the other exchange. But OKEx adjusts to rates based on supply and demand on a daily basis. So one rates per day, and the rates will be determined by the supply and demand between our money traders and how much idle cash that already stake into the saving products.
Okay, and so why do you think that these kinds of yield products are getting so popular both in DeFi and in CeFi? So one of the macroeconomic trends right now, especially since the recent market turmoil earlier this year, one of the trends is that the central banking rates are 0%, and in some cases, like for example here in Denmark, we have negative interest rates where it's minus 0.75, and they have it also in Switzerland and Japan. So, how do you think that this trend plays into the opportunities which the crypto markets offer, whether it's in DeFi or CeFi, to be able to earn some return? Because in these economies where you have zero or negative interest rates, if you have money in the bank, you're not making any money on your fiat, or sometimes they're taking money away from you. Whereas in crypto, you can use Tether or other stablecoins or just normal crypto assets to earn yield. How much of an influence do you think this trend is in the overall global economy for driving demand for these products in crypto?
Yeah, we're actually exciting because the more the central bank would like to step into a negative yield era, the more demand for the yield enhancement product or yield seeking enhancement product. So the beauty of crypto, to be frank, so aside, let's don't talk about institutional right now. That's everyone's looking for yield, they're looking. You can see the treasury bond yield right now is basically hitting record low. But let's talk about just simple retail, simple everyone in the planet, that they might suffer eventually in a negative yield environment. So they might already when they put them in bank, you get penalty or I would say fees or inherent fees. You just put the money on bank. So the beauty of crypto or actually DeFi or even CeFi is you don't need a lot of hassle of maintaining a bank account, and then you would have an opportunities to earn yield as well as you can borrow from a decentralized protocol with or even in a defined features. The entry of barrier of we define on DeFi is actually substantially lower than having a bank account. So I think because in OKEx we actually spend a lot of time in promoting internationally, and especially in some very developing countries. So when we talk about OKEx or crypto globally, saving product or yield products is always the one of the most popular features that is going to be asked by all of our users. So it's not about how I want to buy Bitcoin, how could I buy Bitcoin with my local currency or with my local fiat currency. Most of the question that we have been asked is basically, hey, what is the benefit or how small amount that we can put in your product, even a DeFi or CeFi product, and I can earn yield. So another interesting point of view is they don't even need to worry about or need to ask about a lot about how much percentage that I can earn, because they don't really need they're not looking for super insanely high yield. They just need to have a positive return right now. So I think with the adoption of crypto or DeFi, I would very exciting that eventually one day we can have a really good percentage on financial inclusions.
Yeah, and I think that a lot of people in crypto, they are just holding their coins anyway, and often they'll hold it with an exchange. So they're gonna earn 0% if they're just holding it by themselves, or they're just holding it as a normal balance. Whereas they see it as an opportunity if they can just simply put it into a savings type product like you're offering and getting some greater than zero return. Uh, that's an opportunity that I think a lot of traders are looking for.
Yeah, actually, yes. So that's why despite the fact that I don't think the crypto yield is high considering right now, but everyone is talking about it. Everyone will be. It's look like an entry point for crypto space for many area, many users globally, especially the area or the countries that do not have a robust banking system.
Exactly, and so one of the concerns people have when they're doing these lending products is so what sort of risk are they taking? And if you have, as I understand it, most of these operate as over collateralized loans, or in the case of the margin trading, then it's collateralized by the position that the user is taking. So, how do you handle at OKEx the kind of events like we had in March, where there's significant market volatility? You have a drop in price of 50% within a matter of a day. How exactly are you balancing this risk so that those who are lending out to people using when the borrower is using collateral that is declining in value so quickly, how do you protect against this kind of risk that they might lose some of their money that they are trying to get a yield on?
So on OKEx, especially on margin products, our risk ratio or our effective leverage is actually so if you compare with the liquidity. So even on the most volatile day in crypto, we don't see any issues by liquidating our spot positions and actually take it into the spot markets. That kind of because the leverage is effectively low compared. So we charge the maintenance margin will be sufficient. It's actually sufficiently to cover for our liquidation engine for our liquidation algorithm. So it's not actually a big problem, but also that it means that OKEx is actually be handle the risk management components of these kind of peer-to-peer loan. So the users is exposing to the counterparty risk of OKEx. The counterparty risk contains of how best of OKEx manage this risk, how best the OKEx will liquidate the orders when the market is super volatile, and also how best as OKEx is able to sufficiently to cover positions. Another way is insurance fund. So even on on spot margin, okay, it still contains insurance fund in case that their default value, that or bankruptcy value, that's OKEx liquidation engine cannot cover the default position. The insurance fund will pay off. So right now we don't see anything or any detrimental effect that we need to utilize our liquidation fund right now, even in the most volatile market in crypto.
So this insurance fund that you have, it covers all of the derivatives products and the lending products and margin trading, or are they separate?
It's actually separate, but right now we have a plan to synchronize all insurance funds so that the counterparty risk, so every single product will share the same pool of insurance fund.
And how large these days is the insurance fund on the lending and margin trading side, and how much is the insurance fund on the derivative side? Do you have any figures for this?
So on derivative side, we have already close to 100 million on insurance fund, US.
I think I think that's one of the larger insurance funds on the derivative side. I think BitMEX has the largest with like $300 million equivalent or so, but
Yeah,
100
that's a lot.
million is pretty sizable.
Yeah, we have around 7 million or eight, close to 8 million US in OKEx margin trading. So 100 million and 7 million right now.
Okay, and this you're basically funding these insurance funds through liquidation fees, or how is the insurance funds on both sides handled?
So on derivative side, so funding the insurance based on liquidation. So the remaining balance after we liquidate your orders will be chipped into the insurance fund. And on spot margin, we actually have a better arrangement. So because the maintenance margin is higher than derivative side, so we actually when we liquidate the orders, when liquidate your spot margin orders, we return a portion of the remaining balance after we liquidate and after we chip in around 10% back to our insurance fund. Then you return the rest back to the traders.
Okay, and so since we're talking about yield and passive income in crypto, I saw that OKEx is involved with the Topaz testnet on ETH 2.0. And so this month at Whalepool, we've been talking with a lot of different people from Ethereum because traders are interested and also a bit confused about how ETH 2.0 is going to work, how it's going to roll out. I think most people understand that it's a proof of stake chain, which will allow people to later this year convert their ETH 1.0 tokens over to the Beacon proof of stake chain. And so, like I said, I saw that OKEx is active as a validator on the Topaz testnet. So, are you expecting that you're going to offer ETH 2.0 staking through OKEx services as soon as ETH 2.0 has launched?
Yeah, very likely. But we don't see we won't launch as soon right after the Topaz 2.0 launch. But I think after a while, we're very likely to allow users to earn yield on 2.0 once everything is a little bit more stable.
Yeah, because I think that in the early stages, the yield is going to be something like 18%. And I think a lot of people, especially those who are below the required 32 ETH amount, they're going to want to use central services to get access to this ETH 2.0 staking yield. However, once you are staking in this beacon chain, then there's a lock period where you can't move the funds around for a maybe it's going to be upwards of 6 months, maybe even longer, until the other phases of ETH 2.0 are ready. So, is there any plan that you have for being able to let those who have staked the ETH tokens to be able to trade out of it at some discount where other people can trade it?
Yeah, we don't have an exact plan right now, but we understand the fact that the locking period is relatively long, and that eventually you have a similar token, or basically about two token happen available in the market. So I think there are multiple ways that we can handle. Like we actually create a futures market for that, so that people can track and price within that period. And we also get that, but that might affect our Ethereum derivatives product as well. So I think, but I think we would love to hear more idea right now, but I think that we will potentially uh, leveraging similar experience in the previously forked token, so we might very likely similar arrangement of that.
Yeah, this is actually something that I've been interested in because this sort of fork is different than anything we've really had in the past, where, for
Yes.
example, Ethereum Classic, when they were keeping
Yes.
the chain and Ethereum was forking away from it, And then you have, of course, Bitcoin Cash forking away from Bitcoin. In this case, it's a bit different because you're not getting an additional token for the token that you have on Ethereum. You're having to replace the token with a different token on the Beacon chain. So I was thinking a futures contract probably wouldn't work because of that. But once people on OKEx have actually staked their ETH and they basically given away their ETH and now it's locked away and it's in a different format where it's earning a staking yield. And then on the OKEx side, you have essentially a database entry representing staked Beacon ETH, and then you could have a spot market for these database entries where nobody can withdraw that Beacon ETH, of course, because it's stuck in the staking. But then people who maybe don't want to be locked up, they could sell this database entry to someone else, either in USDT or BTC or whatever, and then you have a little market for ETH that is being staked.
Yeah, absolutely agree. So that is why we need to take a longer time to receive more advice from how we handle it. As I think it's relatively new it's actually absolutely new to crypto space right now, because the very first time you have to replace your token, while ETH has a lot of derivatives already actively trading in the world right now. So that would, if there's one token that you have to withdraw, you have to split off withdrawal for 6 months, then that definitely affect a lot of things, including derivatives.
Yeah, potentially, but I think in this case, as long as the ETH that people can withdraw, all the derivatives on ETH would still be just the same thing. You wouldn't have to take into account an additional asset coming about from the ownership of ETH, precisely because it's being replaced with proof of stake ETH. But
That's
in
good.
any case, I'm sure that you guys will figure out a solution there, because I have a feeling that there's a lot of interest in ETH 2.0 and traders that are concerned that it will take a really long time for them to release it because it's already been delayed by a couple of years. So maybe they'll delay it even more because there's complications that arise with it. But there's definitely a lot of interest around this from traders.
Yes, you're right. We have been hearing a lot of industry participants that about uncertainty of the model. So I think that part of uncertainty would create a lot of different way to. We have to create a relatively fair mechanism for trader to manage the price of the ETH holding.
Absolutely. So along the lines of this discussion about 0% interest rates and negative interest rates, there's a lot of people talking about CBDC, which is central bank digital currency, where globally a lot of central banks have been discussing proposals where the M0 money supply, which is consisting of the settlement balances that commercial banks have with the central bank, as well as the paper notes and coins which are issued. And the idea of the CBDC would be that it would sort of replace the paper note and coin aspect of M0, so that consumers and businesses would be able to have direct access to M0 money through an app or something like that. So China actually has come out and talked about their digital currency electronic payment system. And I guess President Xi and others in China have even mentioned that they've been pretty pro blockchain technology. So, given what we know now from what they have said about the DCEP system, do we know what it's going to look like, or can you talk a bit about what we're expecting of it? Is it going to be blockchain based, or are they just going to have a central ledger? And how is this going to change things in crypto and people's relationship to money?
Yeah, that's a pretty interesting and really big topic. I think the very first is basically China is obviously taking a really serious approach on blockchain. I think it's already been defined as a national strategies. And DCEP might be one of the very first use case to adopt a national developed blockchain. So DCP, the idea of the DCP is to replace M0, to replace cash. So the differences between cash or DCP or versus Alipay or WeChat Pay right now is DCP is actually mint directly by central bank and circulate and distribute by all the other member or state-owned bank. So everyone in China who had a bank account would have a DCEP inherently, or they can exchange with their RMB back to DCEP. The only differences between DCEP or the others, or the WeChat Pay or Alipay is DCEP work without internet access. So basically, if you have a mobile phone, you would have cryptocurrency DCEP, and you can transfer to another mobile wallet. So the core purpose, I think, DCEP is to create a traceable M0. So even if you would like to transact in cash, you would understand, or the government or the central bank will understand how the money flow, or they can keep track of how the money is spending, keep track of everything. Because right now, even the fact that China imposed a lot of law for data sharing for your spending pattern, a lot of spending behavior still lies on the hand on Alibaba or on Hangsheng, WeChat Pay. So I think Chinese central bank do really want to have a much more transparent picture of how people are spending money. Another benefit of DCP that they are looking for is if we have a DCP and we can keep track of everything, we can also put a smart contract on this. So the good thing about is we might, as a central bank of China, they can actually have a bespoke monetary policy, so that if I really want, for example, if I really want to boost one of the very small sectors, like consumer sectors or industrial sectors, or even healthcare sector because of the COVID-19, right now I can do it by simply a smart contract. So by inputting a smart contract, they can basically, the central bank do able to implement stimulus program to a directed industry sectors. I think they're looking for something like that because right now they have a lot of experience on, hey, if we want to QE version in China, that might potentially create a big problem because China has already had a lot of M1, M2 already, and central bank have a little bit struggled to how to deleverage already, and that's the thing that's all been discussed for years. But right now, if I really want to boost up a certain factor with DCEP technology and smart contract, I can able to do it in a bespoke manner, in a controlled manner. Another thing I think that DCEP is looking for is, how about if the use case of DCEP is a set or turn out to be a big success within China, how about I can put it in an offshore RMB, and I can make it at a kind of like a cooperation leeway for us to cooperate with another countries within the One Belt, One Road initiatives, very much like the high-speed rail rate project.
Okay, so it would be an easier way, basically, for as China is investing in these other regions around in the Belt and Road Initiative, that this is a way to more easily disperse the renminbi to those areas where they are investing.
Our one of the national strategies of China is to, of course, the promotion of offshore RMB. So the promotion means more country adopting RMB as a settlement currency, or more money, more country adopting directly to RMB as a trade currency or cross-border trade currency, right? So the One Belt One Road initiative largely involved a lot of lending and borrowing or financial subsidy that have to denominate in RMB. And the settlement centers is actually outside China, Hong Kong or London or Singapore. So they do really want to promote the adoption of offshore RMB. DCEP is another layer. So basically, I would assume that because China has already practically a cashless society because of the adoption of WeChat Pay and Alipay. I think they would like to share the similar experience and technologies to the other countries. That if you want to go fintech or cashless, you can adopt a similar framework of DCP or China. That's already doing really well.
Right. So, from the perspective of these M1, M2 digital payment providers, like you mentioned, Alipay, Repay, are their businesses going to be sort of threatened by the introduction of a digital M0, where if you and me wanted to, if we went out to dinner and we wanted to split the bill, why would I use WePay or Alipay to send you the money when I just send you the DCEP payment instead?
Yeah, actually, if you talk about immediate adoptions, DCP cannot compete with the current Alipay and WeChat Pay in terms of user experience and behavior. I highly doubt it. But DCP should be widely adopted by the fact that if you want to pay the bills or electronic bills or other government related fees, I think they will be very first one to adopt DCEP. When the infrastructure is ready, I think once again maybe the Chinese government will issue some kind of consumer coupon, and that will be in the form of DCEP. So DCEP will have a very interesting or organic synergy or cooperation with Alipay and WeChat Pay, because I think Alipay and WeChat Pay will also support the distribution and the storage of DCEP as well.
Okay, so they would be able to incorporate it within their existing structure. So where Alipay and WeChat Pay are holding bank balances behind the balances they allow people to transfer, they would also be able to hold the DCEP balance behind it as well.
Yes, I assume a lot of interbank transfer will be executed in DCP manner as well. So we don't need to. That actually substantially increase their capital efficiency within the Chinese bank internally. So I think a majority of DCEP transaction will be sit within interbank transaction. A small portion will be adopted by ordinary people to pay the bills with the government related fees. And Alipay or WeChat Pay will handle the experience or user front end of how we spend and receive DCP.
Okay, and one of the big differences in M0 between paper notes and coins and the DCEP is that if I'm holding paper notes and coins and I'm paying for things with at various services or between friends, then the government can't trace this or censor those payments because we're physically transacting the notes and coins. Whereas I presume the DCEP will have some sort of KYC so that they can identify, as you mentioned before, they want to be able to trace it. So they will identify who's owning all the different balances of DCEP. So do you think that because I guess in China there's already an adoption of digital money where they're already KYC'd and can be traced, that they maybe don't value as much the use of bare assets like paper notes and coins which can't be traced, and so they're okay to do the DCEP? Or how do you think people react to this potential privacy issues around it?
Yes, you're right. So people in China is already living in a cashless economy. So they don't really they don't they are, well, I would say they're much less sensitive to the censorship issues on on without they rather have the convenience benefits of using electronic money. So the introduction of DCEP, I don't think is increasing the level of scrutiny of Chinese government over its own because they're already doing similar thing. Every DCPs has to be KYC. WeChat Pay and Alipay has to be KYC as well. It's not making any difference in terms of censorship level within China. But also, I think if you are willing, for the other countries that are going to adopt central bank digital currency, I think they are required to answer the concern by the local people, by their people, whether governments will they need to explain to their own people that how best the government protect its privacy. Uh, so the idea of DCEP or other central bank currency is based practically nobody will understand the ownerships and the transfer between different digital currency holders, uh, even the bank. Uh, so the supervision body should be the central bank or should be the regulators within the countries. So, so I think the government need to draw the distinct difference that, uh, yeah, it's just a cash. It look like a cash, uh, in a private bank level or private entity level, though no third party payments gateway or bank will understand your identity or privacy. Your privacy will be preserved among this private sector area. But if you're doing something shady, you're still touching the line of AML policy, and the government and supervision body will actually know your transactions.
Okay, and how do you think this will impact the policy in China of exchanges in Bitcoin? So being able to provide a order book for Bitcoin versus renminbi. Would you see any sign that they're going to be more accepting of this kind of market? So it doesn't right now, as I understand it, and correct me if I'm wrong. In China, they still have to do it peer peer if they want to buy and sell Bitcoin, whereas in the old days, back in 2013, 14, 15, we had the big three, which was BTCC, Huobi, and OKcoin, which had the largest market by far in Bitcoin versus Chinese yuan. Do you think there's ever going to be a return to those glory days of China's impact in the markets?
Uh, uh, I don't think so. I think it's a very different question. So I won't see and immediately you can see a BTC versus Chinese digital yuan pairs available in any exchange or even local exchange very soon. But we do see a lot of interesting things about reopening or relicensing cryptocurrency exchange or BTC or Bitcoin trading platform within one of the dedicated area in China. So we can discuss with the government about this within China, within the dedicated area of China right now. They look like to be a lot more flexible and open to adopt this kind of innovation, as long as it's contained in more like economical blockchain zone area. But DCP serve another area of purpose. They are not serving to allow Chinese to trade Bitcoin. They have their own purpose, national strategy purpose, by actually reducing the friction between interbank settlement and the promotions of DCEP by having a traceable M0 for Chinese individuals, but also a promotion of DCEP for offshore R&D in all over the world.
Yeah, and it's not just China. There's I've been reading about basically every major central bank is planning to introduce something similar because it makes management of the money supply nationally for different economies a lot more efficient. So I just see that China is really one of the early movers in this area, which is what has interested me in this whole topic.
Yeah, I think Euro has a pretty robust research as well about digital euro as well. So I think it might be, and especially in European region, correct me if I'm wrong, that everyone is having a after Brexit, everyone is have a increased discussion whether Euro will be breaking apart. So they would go back to the old days that of their own currency. But I think eventually, I don't know, but if I make a bold assumption, uh, might be euro will appear. We still becoming a very important currency for representing euro purchasing power economy. But each individual country like Denmark or France, they can issue their own central bank issued digital currency for just for their residents. So there can be a bespoke monetary supply just on individual countries, but at the same time to share the benefits of Europe.
Yeah, I think that would be an interesting development for sure because there's still a lot of disagreements within the eurozone about how things should operate. So another recent topic that's popped up is in Hong Kong. There's a lot of fund managers, like you probably heard of Kyle Bass and some other global fund managers who are taking bets against the Hong Kong dollar. So they're longing USD and shorting Hong Kong dollar. But my understanding, and correct me if I'm wrong, but my understanding is that the Hong Kong Currency Board is actually very robust because they're backing all of the Hong Kong dollars issued by the equivalent in US dollar terms, so that they can basically go up against any speculators to defend the Hong Kong dollar. Um, do you know much about the Hong Kong Currency Board and how whether or not these guys who are trying to trade against the Hong Kong dollar, whether they could be successful?
I think it's very difficult for them to success because Hong Kong dollar is already pegged 100% with US dollar with the reserve with the one of the biggest reserve in the world that to protect. So think about it is it's like tether, right? But I have lots of I have lots of inventory to protect. Is packing exchange rate. So the monetary reserve within the bank right now is in Hong Kong is super safe, and we and right now even the fact that we're having an economic downturn, we would like to issue a big stimulus program within Hong Kong, but we're talking about only a fraction. Even the fact that bills is large, we're talking about 7 billion, but even the fact that we are spending around 5 to 10% among the financial reserve, the foreign reserve that we have right now so far. So I don't think because it's like you're attacking one of the most sovereign cities and the sovereign level is bigger than many countries too. So you either have to wait for a really long time, or you're putting yourself into a great risk.
Yeah, I've been a bit confused by a lot of these fund managers trying to make this trade, and I've honestly heard different fund managers for the past like 10 years who have tried to make this trade, and they never really succeed. Um, I guess if there's some kind of political strife where the Federal Reserve in the U.S. doesn't want to cooperate with the Hong Kong Currency Board, that there could be some kind of short-term liquidity issues, but doesn't seem incredibly likely to me.
Yeah, I think that might be a because of political concern. That might be a short-term monetary outflow in HKD, so that might challenge the Hong Kong banking system. But the fact right now, even without any help from China or even without any help from other countries, Within Hong Kong banking system, I think we have sufficient reserve to protect Hong Kong dollar. Because you can imagine Hong Kong really, it's actually saved a lot of money for years, especially from the benefit from the Hong Kong property market. Each property market are taxable and going to government taxation area. So I think Hong Kong is a well preserved cities that have a sufficient reserve to protect its HKD.
All right, and then let's pivot back to OKEx's products. And like you mentioned earlier, the derivative products, so the futures, swaps, and now the options are probably the most popular. And I think those who are international traders, so we mostly are like we have some Chinese members of the community in Whalepool, but mostly we are sort of European, some US people, but more of a global international community here, and they use OKEx more the derivative side of things. Not the US people, of course, because US people can't trade any derivatives exchanges, including OKEx. But I think a lot of people remember, even just 2 or 3 years ago, that the risk system on OKEx was very different. Like there was a case which a lot of people remember where there was someone with a 400 million US dollar position which got liquidated, and that was like 2 or 3 years ago or so, and other sort of issues that they might have had with the platform. So I was wondering if you could tell the listeners how OKEx has improved their risk system over the past couple of years, and just the different areas where they're protected against any kind of market behavior which is outside of fair value and stuff like that.
Yeah, the very first day that I think like 2 or 3 years ago, I think OKEX derivative system has a really, I would say, junior risk management system. So especially the market is volatile, we will liquidate orders, and the long orders will just sit in the order book until the settlement expiry. So that's why we have to, until 2000, starting from 2018, we do a complete revamp of OKEx risk management system. So what is the risk management system actually composed by a lot of different things, a lot of different components. The very first we actually spend a lot of time is the price limit and mark price. The price limit and mark price do actually protect user from any suspicious trade, or the market is super volatile that trigger catastrophic liquidation in the very short term. So the mark price and the mark price mechanisms and the price limit mechanism protect the user, protects the futures market in any circumstances to be traded within a certain price band with the spot, and the spot, which is an index. We actually spend a lot of time in our index computation as well. So because the index is also comprised of at least 5 or sometimes 6 other crypto exchange data. And on some of the cases, if one exchange downed in terms of failing in data feed, that would affect OKEx index as well. So on the OKEx index, we do put a lot of abnormal handling to handle a disconnect of market data feed or deviations or one exchange market data feed as well. So most of the fact that we spend a lot of time on fine-tuning our index computation and abnormal handling, because the index actually is actually used for calculating price limit, mark price, and our settlement as well. So if there's something wrong in the index, that would definitely affecting our traders on the OKEx. Finally, we impose position limit and tiered margin mechanism. The idea of tiered margin mechanism is basically if we would like to liquidate your positions, we won't liquidate in chunk. We will break into your liquidation order into smaller pieces, and we liquidate gradually. or relatively aggressively. And the idea is to try to liquidate as much and as fast as possible, but at the same time we don't want to liquidate all 400 positions all at once. We want to break into at least 10 or 20 pieces and liquidate into markets, and hopefully the market will have sufficient liquidity to take over the contract, the liquidation orders, and once with the liquidation orders is actually filled, and we check your margin ratio. If your margin ratio resume to normal, your position will be resumed to normal, and you can restart trading again. So the idea is to substantially reduce the position size that we need to liquidate, and so that we can substantially reduce the risk of triggering Casade liquidation, and then substantially reduce the chance that we have a big clawback. So that's why there's a story on the full year 2018 and the very first year 2019. So that is how we gradually improve, and we gradually take back our market shares against our competitors. So right now we have at least 1 year and more that we don't see any major clawback event right now.
Yeah, and I think that's a big difference, that users who might have been trading on OKEx a few years ago, and maybe they, because of these different events, they are not trusting the system as much. It's been a complete overhaul from the position limit, the mark price system, the higher margin requirements for the larger positions, and then you still have this insurance fund which protects the market in case there is a incredibly volatile event. And then instead of doing, as I understand it, you're not across the swap and futures. You're no longer doing a weekly settlement where there could be a crack, but it's more like an auto deleveraging where you're instantly clawing back by terminating the open interest between a long and short in order to maintain balance in the system. Or are you still doing clawbacks every week?
No, we don't have a auto deleveraging system. So instead of weekly settlement, we right now we do it on daily. The good thing about daily is you can release your realized profit on a daily basis. So you can assume that if we have a callback, that will be happen daily on a daily basis.
Okay, so traders that before were maybe used to where they can't remove their profits until an entire week has passed, now they do you do it every day.
Yeah. So that would be substantially increase the capital efficiency of traders. We potentially introduce real time settlement. We are discussing about something like this. So hopefully it can happen very soon.
Yeah, so I think that people who maybe used to trade on OKX, they'll have a very different experience in a positive way these days, and maybe should give OKX a try, because the things are very different now in terms of the trading experience. And in that regard, you've recently launched options markets, which currently Deribit is probably the most dominant Bitcoin and Ethereum options market, and you've added this Bitcoin options market where there's a central limit order book for the different maturities and the different strikes, where unlike Binance's quote options market, which is not, in my opinion, not really an options market because only Binance is able to underwrite the contracts, and so they decide what the price is trading at essentially. But on OKX, users can underwrite contracts themselves, and it's an open market where anyone can buy or sell puts and calls at various strikes on various maturities. So this is like a real market, just like Deribit. And I've noticed slowly there's more and more action happening on OKX's options market. And there's one of the features which when I was testing it out, I was quite pleased with, was that if someone doesn't understand options very well, there's sort of this guide that the UI will take you through, where you say, do you think Bitcoin's going to go up or down? And then it'll suggest what contract to for you to buy or or sell where it's very user friendly for someone who, because I think that there's a barrier for certain traders who don't understand the non-linearity in the options. But maybe you could tell us a bit, Lennox, about what your plans are for the options market and how you plan to take on their bits in terms of market share.
Yeah, I think option is one of the most challenging project in on OKEx. We spent the entire year to figure out and seek a lot of consultation from a lot of experts to make our option. We also understand that finance products, right? So I think that when we actually first engage with the discussion, hey, OKEx need to make some option related products. We also understand that a warrant type option, so that the trader can only buy, you have no right to underwrite option, is actually much easier to make, to launch, and the risk is actually substantially lower, and also you can make a lot more money than this because you're the one you're the only one who's selling the options. But we also understand the fact that if we make warrant products, the premium or the price that the trader need to pay for buying a volatility, either call or put, should be substantially. So that's why we insist internally that we need to build a fairly open market. Everyone have the capability to short and to underwrite option, and the rights of pricing options to be lies back to the market, to the market makers. So that's why we spend substantially more resources and money and time to develop the options market as is right now. So that's why we are super endorsed what derivative does, because we know how difficult task it will be. So right now we just launched the option market. We are the people are particularly excited because we see the open interest on CME on Bitcoin option is getting record high, and the derivative volume is gradually climbing. The open interest is gradually climbing. We still actually really focus on the underlying basic option product improvement. For example, right now we still don't have portfolio margin within the option. So right now we're putting a lot more emphasis to underlying fundamental on option markets for especially market makers and professional traders. And also we potentially gradually to introduce more expiry on options. So might or might not be daily or bi-daily options, or might be monthly option as well. So we're hoping that everyone, the traders on OKEx alone, can price different maturities on option. So eventually, a big traders or the Bitcoin holders can issue or can buy a relatively bespoke option contract for them to hash or to manage their cash flow with just on Bitcoin option. So option, I think, is just basically a fundamental layer. It's just a very basic layer for the creation of the structured products by the third party or by the traders, and the other interesting Bitcoin related structural notes that people can understand, or the retailers can understand, or even no voice hash fund can able to understand the price, to buy, and to manage their risk. That is our plan.
Yeah, I think that's exactly right. Once you have so you've already got the futures and swaps down, which are important for linear risk management, and then once you have the options layer for non-linear exposure to risk, you can combine them in different structures and offer very interesting kind of products. One thing I would mention is that on there, but they have this position builder where you can simulate the combination of different options and futures. I'm not sure if you guys have developed this yet, but I think this gives people a good way to essentially predict what their payoff is going to be with a certain combination of options and futures.
Yeah, Right now, we still very much very focused on the basic tech of our option market. So the basic tech means the margin calculation system and the capacity of the matching engine, the latency of the matching engine right now on option markets. Position builders also has a plan, but this I think is the features. We are right now we are putting most resources on the fundamental tech first. So I think once the foundation is laid out, we would naturally have a bigger volume if we compare with having a bigger pie in the entire crypto option market.
Yeah, I think in general this is going to be a trend in the next few years in crypto. There's going to be a growing options market because we've exploded in the future side of things over the past 5 years. I mean, I've been trading in these derivatives markets since the beginning, and it's pretty incredible how many shops out there are now trading various futures and swaps contracts. It's there's basically like 20 different shops now where someone can trade Bitcoin dollar derivatives, which I think is great. And the next step is these nonlinear options. So I think it's great to see OKEx making a proper effort in that area, unlike the Binance warrants, which correctly say they're warrants, not options, because yeah, they're basically monopolizing the underwriting of the contracts, and they're all under 1 day, which I think is a bit strange, but it's very unfriendly, I think, to retail traders who have to use these Binance warrants. And so I think that the fact that you're taking a more open approach in the markets where it's really a trader's product, not a product that is designed to affect retail traders and make more money there. I think you're going to end up strategically making more money down the line with a honest options market than to do kind of weird binary options or warrants market, which a lot of traders would not have a good time with because they're priced way too high.
Yeah, we rather create a more open ecosystem or a market space than than just making money right now. We rather focus. So and we understand that right now we can see on option premium on average should be only 1/5 or 1/10 of the other warrant products available in the market. So it's actually benefits to the trader. So more competitions, uh, is actually better to the retail traders.
Absolutely, I agree, and I think you're also doing it in a pretty retail friendly way, where people who are new to options can ease into it with understanding the different dimensions. So, what about speaking of the different dimensions? There's certain straddle options products out there, FTX, and I think Delta Exchange is running something called Move, um, which settle. They're basically futures contracts which settle to the absolute value and the change of the underlying price over a period of time, which is the same as doing a straddle in options where you're buying both a put and a call at the same strike. So you'll make essentially the same amount of money by which the price moves minus the premiums for buying the put and the call. So now that you're running the options market, are you thinking about a more retail friendly type straddle options volatility contract?
Yeah, I think we are getting there because we we understand that the similar product like Move, but we are actually waiting for a more liquid option market so that we can have a better implied volatility figures for us to create VIX option or VIX futures or similar type of volatility futures. So our plan is to make sure the liquidity is picked up first and have a fairly priced in private volatility. Then we will launch the VIX futures rather than Move type of products.
Ah, okay. So more of like a VIX type contract, like the CBOE runs on the S&P.
Yeah, I know everyone wanted to, but at the same time, you need to have have a healthy or organic dynamic between option too. So I think you need, so by then you need to have a fairly liquid option market with fairly liquid, fairly priced implied volatility, and also you can trade on that implied volatility as well.
Definitely. And in terms of the plans outside of just options and futures and swaps, do you have any plans to expand to derivatives on legacy markets? A lot of people have looked at the oil market and are interested in trading gold and stock indices. And there's a pretty high interest, I can tell you, just from the community here at Whalepool. A lot of traders would like to use their crypto assets to trade these legacy markets so that they can balance their risk exposure to non-crypto markets. So, is there any plan for OKEx to expand in this area?
Yeah, I think it's worth to discuss. Of course, we still believe we're actually crypto relatively crypto natives. So we're heavily involved on crypto assets. We're heavily involved. We really want to bloom a better crypto asset for them to trade the price. But the integration or the bridges between having a legacy token or tokenized legacy products is actually an interesting area. And the interesting area is not because we don't understand the demand. The interesting area is mostly related to the regulation development. So because a lot of the commodities tokens or vault token or oil token, gold token somehow carries regulatory concern because it look like derivatives, look like securities. So it's kind of like fall into different kind of category or somehow indirectly fall into different kind of security law in certain jurisdiction. Because of the developments on the security token or the STO related regulation right now all over the place. So I think we can actually potentially discuss whether we can tokenize certain legacy products and put it available on crypto.
I mean, what about instead of tokenizing it, do you provide an index that is tracking the market and then people can just use crypto or Tether or something to trade this rather than just trading the token?
Yeah, it's actually in a regulatory perspective, it's actually similar. So if you're selling a price that's benchmarking a legacy product like oil, commodities, or even Apple shares or Google shares, you look like you're selling a service that's more likely a brokerage service or dealing in securities or dealing in derivatives in the traditional sense. So there will be even the fact that you're trading with crypto, even the fact that you're trading with Tether, you're touching that part of the area. So on that front, we have to convince our compliance that we have to discuss with compliance and even the regulators whether we need certain license on that.
Okay, that's fair. And yeah, obviously, when you're running an exchange, you have to make sure you're following the rules. So finally, I wanted to talk about the OKB token from OKEx. So a lot of traders are big fans of these exchange tokens like BNB and Leo from Bitfinex and FTT from FTX. And one of the things that people really like in these tokens is that the exchanges are dedicating percentage of revenue to buy and burn the tokens, which is a solid way to drive demand and to reduce supply. And because these are already successful businesses which are making money, so being able to get a stake in the future of these projects is of interest to a lot of traders because trading is probably the top use case for crypto when it comes down to it, speculation and such. So, can you tell us a bit about how OKB works on OKEx and just the basic token economics that you are running on it?
Yeah, OKB is one of the very first platform token that's adopting the buy and burn mechanism. So basically, 30% of OKEx revenue generated by trading fees will be leveraged to burn OKB on a regular
Oh, you're. I think he got disconnected. 1 second. Yeah, he just got disconnected. He'll be coming back on. Okay, Lennix, you're back.
Hello, can you hear me?
I'm not able to hear you. Yeah, I can't hear anything.
Hello?
It's
Hello?
very faint on my side. I don't know if anyone else can hear.
Hello, can you hear me?
Yeah, that's a bit louder. So you're talking about OKB, and what was the percent that OKX uses from revenue, or is it from revenue or from profits, and what percentage is going to buying and burning OKB?
Revenue, 30%. So that
Okay,
is the
cool.
percent. So every buy and burn record is also available openly, publicly on OKEx website, on chain as well.
And OKB is currently on Ethereum, but I saw plans for a separate OK chain. Can you talk a bit about what that's going to look like and how what the consensus mechanism on OK chain would be?
Yeah, so basically, OKB has potentially will be it's right now Ethereum based it, but potentially will be going to the OK chain based it together. Our so OK chain is actually based on Tendermint, right? So it relies on a set of validators that's responsible for committing new blocks. There will be a 21 blocks, and the 21 validators. So it's more like a depose application. So validators can actually stake their own OK tokens, not OKB, and have OKD delegated or staked it by token holders. The validators will be responsible for generation of the new block, and the top 21 validators candidates will be actually the most staked to become the OK chain validators. So the
Okay,
validators are,
so
sorry.
sorry, go ahead.
No, just to add up that, so the validators and these delegators will actually potentially able to earn OK token, OKT, when the block is created and as the transaction fees through the executions.
Okay, so basically, the value of OKB now is influenced by these buy burns, which OKX is doing relative to the revenue, and there's going to be a shift to this OK chain, which is most likely going to be delegated proof of stake, similar to like Tezos or EOS or one of these others. And what other sort of benefits could an OKB token holder have? In it, like not just the value that's driven by the buy and burn, but what other sort of benefits does an OKB holder have?
Our OKB holders will actually have a trading fee discount, and also you can participate on Jumpstart, which is our IEO platform, and also you can be the you already able to use in OKB to pay and to spend in a lot of a lot of numerous blockchain-based company, tourism, or different kind of OKB partnership program. But most of the values right now, I would say, is driven by the expected income, the expected revenue of OKEx, and staking OKB for jumpstart and trading fee discount.
So, in order to get the trading fee discount, a user has to stake it, or they just have to hold it in the exchange wallet.
You just need to hold it. So just hold it, and we can check, and we automatically adjust your fees.
Okay. Yeah, that's pretty straightforward. So, yeah, I think a lot of traders are big fans of these exchange tokens because, especially if they're already using the exchange, then they're getting a discount on the fees and they're sort of investing in the future of the exchange and the success of the exchange. So I think it's a good model. So that basically covered all the questions that I had. I don't know if any of the other listeners have any question that we have not covered.
Yeah, I think things this one.
Yeah, okay. I don't think anyone has any questions. I think we covered basically everything, all the different products, some interesting topics on DeFi and CeFi, and the central bank digital currency topic, which is getting a lot of attention, and the Hong Kong dollar, and yeah, just some of the plans that you guys have. So I think that covers everything. So thanks very much for your time, Linux. I think we've had you here about an hour and a half now. So thanks very much for coming on and discussing all of these variety of topics. And I think a lot of the traders are pleased to see the progress that OKEx has made the past couple of years. And we hope that you guys continue to innovate in a lot of these different areas. So thanks very much for coming on, Linux. And maybe you can just tell people where they can find OKEx and just where they can find you on social media or whatnot.
Yeah, I appreciate that. Thank you, Swami. So you can check out on OKEx.com for OKEx website, and you can follow my Twitters, Lennix at OKEx.
Perfect. All right. Thanks a lot, Linux, and we'll cut the recording here.
Thank you. Just appreciate to talk to you always.